Daily Market Commentary. I am your host, Chuck Fulkerson, after taking a day off yesterday due to a little bit of a travel day. We are back and rocking and ready to roll. So for those of you that are new to the channel, please click the subscribe button down below to get the daily updates. And so you will see when these videos come out. For those of you that are new, we do the same 10 to 12 futures markets every day, identifying potential breakouts and turning points from an educational perspective. So let's go ahead and dive right in. The S&P coming down a little bit today. You know, we didn't have as big of a move as I think a lot of people expected yesterday on the Fed announcement, as actually we popped up after the Fed announcement, only to sell off at the end of the day. And I think that pop up, I really feel bad that I wasn't able to get the video out yesterday, because this, hopefully you're able to catch this move. This was a pretty textbook fair price value area that price rallied into before then selling off. So if you were able to catch that move, let me know in the comments below. I really think it would be it'd be cool to see that. That's a, you know, what we look at when we see here. Why would we have used this level? Why would we have used this area? Because this area was our breakout area in the past, where we had that strong breakout move earlier in the week, where we had a little bit of basing. There was an equilibrium of buyers and sellers, which served as a support area in the past. So that was the clue for a pretty strong reversal at that point. Now, what are we doing right now? We're continuing to fall from that level, as we have, you know, fallen from that area. In here, we're down about 40 points in the S&P from that move. As far as today goes, what are some opportunities that you can look at? Well, I think there's plenty of room for the markets to continue their downward move. And if we want to see kind of where we may go, let me go out a bit deeper to, say, the 4-hour chart. You know, on the 4-hour, we've got a little bit of potential support right here, but none of these are super strong areas. And I want to see if we put in a lower swing low on the 4-hour. You know, ever since we put in a higher swing high, higher swing low on that 4-hour chart, we've been able to move up pretty nicely. However, our volume has been down, and we're in a bearish volume signature overall. So a little bit of concern with that bearish volume signature that we are putting in play. So as far as today goes, you know, if you do get a little bit of a rally up, I would be more comfortable shorting a rally higher. If something does indeed come back up, you know, we may get a little, you may get another bite at the apple somewhere right up in here on a 15-minute chart. If you get this move back into here, I'm going to turn this into a purple line, because we use the purple lines to signify small time frame levels. So if you do get a little pop back up into this area here, you may be able to get a small reversal off of this trade. Looking at the Nasdaq, so the Nasdaq, we had a breakdown out of this area, and this breakdown is still continuing to work. So those of you that took that breakdown trade, you're doing great, feeling happy about it. And it's continuing its march down. Same thing on this one. If I go to a 15-minute, we can look and see if there's a potential reversal opportunity, and it would also be right here on this 15-minute time period. If this is an area that you know, if we do get a little bit of a pop-up right around market open, then you may get a reversal into this zone. So, you know, I'm really going to try to maintain my discipline this morning and not over trade. Meaning, if it blows through this area, it doesn't mean that I immediately go long. I'm going to try to stick to my rules, and because I don't really have a strong buying area in my NQ until way down at about 66.20. I mean, that's really when I zoom out of that NQ and I go to the hourly chart, my strong buying area doesn't come into play until way down here. So, you know, there are some areas in here that could be worth buying, but this is really my next two strong buying areas, and they're fairly far away from current price. Looking at crude oil. So crude oil yesterday, we had a very strong move higher in crude, and it came into our area and then blew right through it. So this one did not work out. So if you took that one, then sorry. Guess we missed. that one definitely missed out on our trade. I felt like we might get a reversal out of this little region right here. We blew right through that area, and so now we've got that bigger picture upward trend direction. Now, I had set up this as a potential long if price comes back into it. We just didn't get back into that region. So I'm going to leave this one in play. We may also get another long right in through here. So those of you that are trading crude oil, if we do get a pullback some point today into this region here may be something to take a potential look at. So be very aware of the arrival into this region if we get a pullback into here, but I think we could get a reversal off of that move. Gold yesterday hit our level and then boom, has started to come down from our level in gold. Now we came all the way to the top of it, so we've got to remove it at this point. No longer valid. But gold is working out in our favor. Now the level that we had here, price came to it and blew right through it. This is a dashed line. Remember, a dashed line, we don't take the trade unless we get an entry and then price starts to come out of it. So the dashed line trade should have been canceled, but your other short should have worked out just fine. So we got to remove those two levels and those two areas. Now, I'm not going to reuse any of these areas because of their, I'm going to use the term wickiness. If you see these long wicks here, these long wicks up here, this tells me that that we had an inability to hold on to gains and an inability to hold on to losses. And so I'm going to leave these areas alone for now, and there's really nothing I'm going to add to gold at this point. I'm going to leave gold be. Going to our bonds. So bond market, we did have a breakdown yesterday in the bonds that finally met as we've been waiting and waiting and waiting for that breakdown. However, we then immediately pop right back up out of it. So you may or may not have gotten filled on that breakdown. And if you did, you probably got stopped out right away. This was a shakeout trade based on what happened with the rate announcement. That's all this was. This was a shakeout trade. And frankly, one of the more dangerous things about breakouts is sometimes you will get a breakout shakeout, and meaning that the market has a perfectly good setup for a breakdown, but around a major announcement, we'll get a big violent move just to shake out the breakout traders, and that's exactly what this was. So I still am kind of okay leaving the breakout line in play because I think that was just a breakout shakeout, and I still think that the breakout is still viable. And I think I may patent that term, the breakout shakeout. I'm going to leave this breakout in play because I think this is still a very viable trade. And I'm willing to take another bite at the apple on this one if indeed it does come back into that region. Canadian dollar, we didn't get our breakdown below this 76.46 area. We actually have rallied up from it. We do have our reversal in play right here in the Canadian dollar, just somewhere up above us, so keep an eye on that. Be aware, however, of the arrival into there, making sure that you've got enough profit margin to make it really worth your while. If we don't get up into here and we get a bit of a reversal, you might have an opportunity right in here. I'm gonna put this on. It's a fairly wide area here. I'm going to put this on as a watch on the kind of the watch area. And what I'm going to do is I'm going to change this because I still have an overall bearish sentiment on the bigger picture, but I'm going to change this to a confirmation style of an entry. And if you do decide to take that on a confirmation style of entry, make sure that you manage that stop very tightly. The euro, we still have our euro trade in play. No reason to adjust that as we currently have it. Great British pound and Japanese yen. So our Great British Pound position, we had that breakout above, and that's continued to run, and it's held strong. We met our short entry right here, so we are just in that short entry. Now, you may or may not have taken that short entry based upon the arrival into this zone. Fairly weak arrival. If you did take that short entry, I would already have that stop moved to lock in some profits, or at least even break even, because I think that this is really your sweet spot for your target is this 41.33 region. Japanese yen. On the Japanese yen, I still don't have very many areas in play, and the Japanese yen just hasn't given us a lot of good solid moves on the 1 hour chart in a while, frankly. You've got to look to the 4 hour, and it's continued that upward sloping movement, right? We still have that upward trend direction on the bigger picture, but my momentum is definitely weakening. If I look at this, I can see that I'm definitely upward sloping. However, this is what's called a rising wedge pattern. We have a rising wedge here, and a rising wedge that breaks out to the downside is actually a very strong bearish pattern. So, and that's simply because we have rising swing lows, but our swing highs are not getting much higher. If I were to throw a momentum indicator on here, you'll see that my momentum indicator, though I'm getting higher swing highs in price, swing high, swing high, swing high. I'm getting the same or slightly higher swing highs in price. Notice my momentum swing highs. Swing high, swing high, swing high. So just keep that in mind that our momentum is definitely waning. This is a bearish reversal signal. So for those of you that are more like swing and position style traders, if we start breaking through some of these fair price value areas where we think there could be buying, then there's room for this thing to fall a bit deeper. So longer term traders, just keep that area in mind. If you are more of a, if you don't trade the actual currency, by the way, this is the currency ETF, excuse me, the currency futures contract, you could always trade the currency pair, or you could trade something like FXJ, which is a currency, FXY, excuse me, FXY, which is a currency ETF. The currency ETF is an alternative to trading the currency if there's something that you may want to look at on here. So just something to keep in mind as an alternative in your investment portfolio if you do want to take advantage of some of these moves in things like the yen or the pound, and you don't have futures or currency ability, you can trade the currency ETFs. So, all right, well, that's all I have for you today. If you have any questions, please feel free to reach out, chuck@iiefinancial.com. And until tomorrow, take it easy. Talk to you soon.